Hi, this is James Ing with Full Capital, and I'm here with Jeff King of Ramey King. Jeff, thanks for jumping on this beautiful afternoon here in Texas.
All right, James, glad to be here. It's a nice and cool, late July day. We're 102,
Well,
no big deal, right?
yeah, Jeff. So I appreciate you coming on today. Maybe to kick it off, give people a little bit of your background and what your company does.
Okay, we're our agency. We're an independent agency. Also, I'm Jeff King. It's Ramey King Insurance. We are a full service agency with a practice group in real estate. We've specialized in multifamily since the mid 90s. Although we've been in business, I've actually been in business for this is my 39th year, although I started very young. But we have a 9 or 10 person team for real estate to deal with the buyers or just the real estate owners, and
All right.
we can bring that to the table and help people.
So talk about for people to get an understanding of what you guys do day to day. We work with you guys on a number of transactions, especially when people are buying deals,
Yeah.
or even current owners. So talk a little bit about the process of working with you guys, and then the general market right now.
Okay.
Inflation, whether you go out to eat or look at your real estate tax bill, everything's going up, right,
It,
with
it
inflation.
has
So
been. It has been.
insurance is one of those things too that is going up. And so give people an idea of maybe, if let's say they're a buyer and they're going to go look at a property, what are some of those things that the insurance, when you put your insurance hat on,
Uh,
that's a trigger for you.
all right. Well, just insurance, just to clarify, we're talking about property insurance, damage to the property. We're talking about general liability, and usually talking about an umbrella policy or a higher limits liability. But some of the things when someone goes to look at a property or has a property, they want to know the information we need. We need square footage, number of units. Updates is a big part. You want to know the age of the roof. Most of the brokers will have that. You want to know updates having to do with the electrical wiring. You also want to know the type of wiring. If generally copper is the best, but in the last 30, 40 years, there's aluminum wiring out there. Some have been pigtailed with various methods. Um, well, one we run into over the last couple of years is the type of breakers. You have what was referred to as the Federal Pacific breakers or Gensco breakers. All you have to do is open the breaker box and look at it and see what brand it is. But those have caused some static in the market. And the other part is claims information. A lot of times at a early stage, a lot of times that's not really available, but you can get an idea from your broker. If you have existing property, you'll want to know that. You'll want to track that and have an idea. Your agent can provide it. The seller can provide the information, usually through the listing broker. But just having an idea of property claims or liability claims. But
Okay.
it's a uh,
So all right. So if I'm buying a property, I give you all that information. I say, hey, look, it's copper wiring. Age of the roof is 7 years old. There's no stop block panels. Here's the lost runs. I send that all to you. Then what do you do?
we take it, we have to put it on some application forms, some standard forms we use. The Accord applications, what they are. We fill out some supplemental forms we have. But in the market, there's in theory always 20 carriers that say they write apartments. But for a particular property, there may be three or four based on where the property is, the age, the activity, the updates. It's our job to know those markets. We have to send it to the markets. A few we can rate online, which does speed it up, but we in turn send it, and send is just emailing it to our underwriters. And then we'll spend a couple of weeks just getting them to look at it. There's usually questions. Most of the time at the early stage, we don't have all that information. A new buyer won't have it all. It's just not apparent at the broker stand. The broker can get it, but it takes a little bit to get it. The loss runs are dragged a little bit further, and even getting details of wiring and unless the broker's done a lot of homework, they may not know that. But we're giving our underwriters time to look at it. And I like to say it's about 10 hours of hard work spread over about 2 or 3 weeks time period. And it's just getting this, probably not unlike the mortgage business, giving your mortgage companies time to look at it and just man hours doing it. But once we get that information, then we get back in touch, compare notes at that point, or the
So
proposals.
all right. So then you choose one of those insurance providers. You give
Yep.
them the Accords 25, 28. You send that to the lender. The lender
Yep.
usually has some sort of comments on
They
the forms.
they do.
Um, right now, a lot of people, there's really like three main sources of capital right now. One is Fannie Freddie, then
Yep.
there's non-recourse bridge, and then there's also recourse bank loans.
Okay.
If you were to stack those in terms of highest requirements to lowest requirements, what's
Uh,
usually when you guys go through that process of back and forth with the lender's insurance consultant, is there a ranking there?
they're really Freddie and Fannie have good requirements. It's standardized, which is helpful.
Okay.
They are looking at many times, and this has happened in the last year or two, and I think it has to do with inflation we've had. That they are sometimes the values we go in, even the purchase price, but Fannie, the mortgage company, may come back with their own valuation. And unfortunately, we don't find that out until a little bit later in the process. We've already presented and they come in at a different number. So the earlier we can get that, so that comes into
So
play.
that's Jeff, that's the insurable value.
Insurable value.
Okay, so the insurable value typically comes, the appraiser might put that
Yeah,
together. So you might
that's
start the
correct.
process 2 to 3 weeks later. The appraisal comes in. The insurable value might be $20 million, and you guys had 18 million. So
Correct.
you have to come up to that property value on your coverage. Is that right?
We do, and that's can be problematic, but it's just a sign of the times. Not every Used to about 1 out of 20 mortgage companies set that value, but we're seeing it in over half of them now. And and ideally in property, we're writing coverage on a blanket basis. Picture 100 unit property, 10 different buildings, and we start with a fairly conservative number, and we can use that whole number for any building. But a lot of times now we're seeing with mortgage values going up. So that can call that's a bit of a hiccup. It's something to be aware of. The earlier we can find that out, the better it is to give a discussion. As for corrections, most of the time the corrections on the Accord are more clerical, making sure we have the right mortgage company listed, the right buying entity listed. We do run into limits of liability most of the time, $2 or $3 million, which is usually arrived at using an umbrella policy is adequate. No one can ever say what the right number is, but on the new purchase, the right number is what does my bank want me to have the coverage to get
Right, right. That's so I I guess going back to that question, so you think Fannie and Freddie are probably in the middle?
they're
Uh
in the middle there.
yeah,
We,
yeah. And then some of these, yeah, I mean I think I've seen a little bit more back and forth with some of the non-recourse bridge lenders having a little bit stricter requirements on the insurance. And so um
Occasionally, we'll see a particularly low deductible on a larger property. And I've had a $30 million property that they wanted a $25,000 deductible for all perils. And that's, I don't know what the right number for that particular buyer's budget is, but 25 is fairly conservative. And usually they'll have some flexibility in the wind and hail, which because of where we are, the hail area in North Texas, and that's in a few other states. But occasionally we'll run into that. We can get lower deductibles. It just adds to the premium. So that's a little problematic. But we do ask for the specifications as early as possible in the beginning, so we have an idea of what we're looking at.
okay, so you're saying some lenders might say we only want a $25,000 deductible, and so that's going to increase your premium significantly.
That's correct.
All right.
That's correct.
So we've done the Old Capital Conference 5 or 6 years now. Is there one one event or one meeting that you remember the most out of all of them out there? I know you've been to a couple of these conferences before.
Well, all of them. But other than, well, the couple of things. First, the celebrity status of our friends at Old Capital putting on the program, running it, and I get a real charge out of that. But probably one of the funnest ones was I got to meet Lou Holtz a couple of years ago. I read a couple of his books and like a lot what he says, and got his autograph. He signed one of my books up here. But I got in and met Roger Staubach, and just we're living at a high level. We're celebrities, insurance and mortgage celebrities. So it was fun, but I
Well,
have a great time at each of them for that matter.
well, Jeff, we appreciate not only you sponsoring the conference, but working with you and your team on a lot of these transactions. Going back and forth because we want to make sure not only the borrower is adequately insured, but then making sure that they close on time with a lot of these acquisitions. So we appreciate it, and we'll see you in September.
All right, sounds good. Thank you, James. I look
All
forward
right,
to it.
thanks, Jeff. I see
See
you.
you.